Talk to me about interest rates. We know in the budget they factored in a rate rise. There's plenty of talk around that the RBA is going to pull on a rate rise in May, they say, perhaps even days out from the election. Yesterday we saw in New Zealand the Reserve Bank lifted rates there to 1.5% in anticipation of their inflation mark hitting 7% later in the year. Now, 1.5% in New Zealand is a lot higher than where we are. Where do you think this will go?
Well, I think it's clear when I said a moment ago things are very strong temporarily, that's partly because we have our economic settings all wrong. I think particularly for monetary policy and also to some degree for budget policy at the moment, in the sense that with the economy performing as strongly as it is, an unemployment rate of 4%, solid growth last quarter, even though, as I say, I think they're slightly flat at the state of the economy, it's clearly nothing like an economy that should have essentially zero interest rate, 0.1% cash rate, and still an $80 billion budget deficit. So the issue here is that the Reserve Bank, both a short-term and a longer-term, medium-term sense, has got its settings completely out of kilter with where it should be, where they should be. In the medium-term sense, what I mean by that is they should have been raising interest rates some time ago. It was very noticeable, for example, in the aftermath of the global financial crisis in 2008, the Reserve Bank cut rates very fiercely in the immediate aftermath of that. But within 12 months, as it became clear that the damage was not as great as was at first feared, they started raising again, and they raised the cash rate 7 times in the subsequent 12 months. The Reserve Bank, on this occasion, however, has simply sat on its hands, and it kept, in fact, promising that it wouldn't touch interest rates. It would keep them essentially at zero, and some quantitative easing going on through till 2024, when it's been plain for some time that that's completely inappropriate for the state of the economy. So in a medium-term sense, they should have been raising rates some time ago, and that would have also particularly helped to take some heat out of the housing market. We've had this absurd situation that in Sydney, for example, house prices have gone up almost 30% in the past year, in the middle of a period where it's not a booming economy. It's absurd to be having a situation like that and yet have zero interest rates. But also the Reserve Bank has botched this, in my view, and the governor has botched this in a short-term sense, in that the last thing you want to be doing as Reserve Bank governor is raising the cash rate in the middle of an election cycle. And so it should have been clear that there is a major inflation problem brewing in Australia, and even more so overseas, already in America, in Europe, in Latin America, etc. There are very high inflation rates, and you've just mentioned the New Zealand example. They're already baked in, and the Australian inflation rate we'll discover in a little under 2 weeks. The next quarterly figure will come out and almost certainly will be close to 5%, which again will be extremely high by recent standards of recent decades. But we already knew that inflation was headed up and spiralling upwards many months ago. So the Reserve Bank should have been raising interest rates last year, and even having missed that opportunity, it should have been saying in February and in March, we have a situation where election campaigns coming up, and that will make it difficult for us to raise rates. We should be getting in ahead of that, so we can't be accused of making a surprise announcement in the middle of a campaign.